Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, so a couple things. You got FOMC today, 2 o'clock. The bears have had a chance to convert just about every key level on this daily chart over the course of the last 4 sessions. 20-day simple moving average, the daily midband. 9-day hourly midband. They've had their opportunities. They really whipped it around in that 60 to 60 area between, weekly pivot and the 9-day yesterday. They finally took it down, but I mean, they touched that hourly mid-band and that was the end of it. They rejected it from there and they really built momentum throughout the day. You had a little bit of a test of the 80 area early on in Globex last night, and they've gone ahead and they're walking it up. Whether they're walking it up on FOMC coming up at 2 p.m. today, whether they're walking it up on the hard rumors of coronavirus rescue package somewhere in the area of $900 billion. Politico had that about 10 minutes ago. Whatever the reason, technically, the bulls have defended everything they need to defend. And there's only so many chances the bears are going to get to convert that stuff before it's just, in a vacuum, this tape goes up. And if there's news that is providing a wind at its back, it will go up even faster. So the fact that we're back here basically battling over the roundie at 3,700 should not be surprising, considering the number of opportunities the bears dropped the ball on in the last, 3 sessions. So heading into today, we've got volume weighted average price at 93. You got the roundie at 3,700. Our proprietary moving average 5-minute mid-band are sitting right in the 97.75 area. You see the hourly mid-band here rising. It's at 89 now. That'll continue to rise as we get into the regular session. It's going to be the tale of 2 tapes today. You're going to have the tape pre-Fed and the tape post-Fed. My only suggestion with regard to the Fed is the same suggestion I give you every time we do this. Don't game the Fed. Don't assume something's going to happen. Last time around, we had a little bit of a move down. I mean, now, that dip got bought along with everything else. But don't make assumptions about what the reaction to the Fed is going to be. There will be an announcement. There will be a reaction range. Figuring out the high and low of that range and whether we're making higher lows, lower highs, breaking out or breaking down against that range is the best way to trade really any event that has a price attached to it, whether that's the jobs betort or FOMC. That's the way we've done it for years, and it's served us very well. That's what we'll be doing today. Betting black at 159 in 50 seconds is not typically the way to go. If you're right, you'll pull the trade off. You won't make as much as you would have made because you're getting caught with your hand in the cookie jar. If you're wrong, then you'll double, triple, and quadruple down because the whole trade is not about price. The whole trade is about being right. Dinky little trades turn into gigantic swing trades that obliterate accounts because people would rather be right than still have an account. And they'd rather be right than make money. Not admitting that you're wrong has lost us many a trader over the years out there. And one of the things that we fight against here in the room is we don't add to losers. We don't care which way it goes. We just want it to go. And we worry about the 10 handles in front of us, not some target way up or way down that's going to make us feel smarter. Boring and profitable is at the end of the day, that's what grows your account. All right, off my soapbox. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room, and I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook, and join us for a free trial at www.princetontrader.com. Trade them well.